Hello, everyone. Joining us from Ingo Payments is Lydia Inboden, who is Chief Revenue Officer. We're discussing banking as a service, the idea of where things may stand. Some think there's an existential crisis in the sector. Maybe there are some glimmers of hope. We're going to get into all of that. Lydia, welcome. Nice to have you.
Thank you.
So let's talk about where we are right now. We are having this discussion. Synapse is in the headlines, Evolve is in the headline. Nobody seems to know where some of the money has gone. And there are all sorts of things, such as consent orders, cease and desist orders, things going on in the background, all of which begs the question, banking as a service, is what's going on to your mind representative of a systemic issue? Is it a one-off? Maybe there might be a combination of the two. But what do you think?
Yeah, I think it's probably more of a combination of the two. These incidences highlight kind of vulnerabilities within the different business models, in my opinion, what we're seeing. I also think a part of this has been regulators are just now creating a framework of, how these financial institutions or companies should be regulated. And so I don't think that it's systemic in nature of shutting down the industry per se. But I think given the various business models, you may see some of this shake out differently depending on, the bank and model that they've chosen to take their path down.
To that point, with the idea of the models that might see a shakeout, you may see some models become more emergent or prevalent. So tell me a little bit about how you see the models as they are now, and maybe how you might see some shifting more immediately, and what's working and what's not working.
Yeah, I think this notion of commoditizing the bank charter and disintermediating the bank from the end fintech program, who's effectively the marketing arm for consumers, right? I think that's where all of this is, started. We're starting to see it break down. I think everyone should be moving, if they're not already or started that way, into more of a direct business model where these fintechs are having direct relationships with the financial institution holding consumer funds. I also think, the commingling of consumer funds within these tech platforms has got to stop. And there needs to be more of a one-to-one correlation to the fintech program and the financial institution.
With a direct relationship, do you start to see an easier path toward vetting those relationships? On one hand, the other part is what becomes more apparent in terms of risk management and really getting a sense of who's where and who's got liabilities in what part of this ecosystem and where the money is. So what happens with a direct relationship that really can't happen with any other iteration of a model?
Yeah, I think it'll benefit both parties in both ways, right? So I think on one hand you have fintechs who need to be vetted more thoroughly. BSA AML policies need to be specific to that program and the demographic they're serving, set by the financial institution, all of their third and fourth parties that they're using in their ecosystem. The financial institution needs to be able to show proper oversight into all of those downstream partners. I think the capital requirements, do these fintechs have enough runway to manage fraud and marketing, right? And to really be successful. I think those are questions that these banks should be asking themselves. And in the inverse of that, are the banks that the fintechs choosing, like, are they maintaining proper liquidity and capital management structures? What is their relationship with their regulators? How many fintech programs do they have? Are they newer to this space? What do they have a committee? What does their board look like? Is their board educated on this notion of banking as a service? I think there needs to be more scrutiny and oversight and partnership bidirectionally, actually.
You had mentioned third, fourth party downstream relationships, and we're entering a new phase in banking generally. That's open banking here in the state. So that begs the question here. When we think about the control of data, consumers are out there, they're going to permission their data, they want to make sure it's safe, and yet that data is being used among different parties, as you said, for all sorts of theoretically and hopefully innovations. Tell me a little bit about the ways in which some of these relationships need to reassess how data, which data, and where the data might be held, managed, passed on, and by extension, kept safe.
Yeah, I think the only connection I may really see is like larger financial institutions that are providing these open banking, access to accounts that they house. Maybe they start deciding that they don't want to enable data sharing with what they deem or perceive as more risky banking as service or fintech partners downstream from them. An example that I've seen in the market of this is, early warning doesn't allow fintechs or neobanks to access their banking data through their APIs, whether that be directly or through resellers. And on the other side of this, you see, fintech programs that have higher fraud rates. They may not support the acceptance or blocking those card transactions as well. And so I think if banks feel the risk is too high, they could start preventing, use of these, open banking enablers to neobanks and other fintech partners, which, to your point, would kind of hinder innovation, in my opinion, and money mobility.
That is a key question. Money mobility. Let's talk a little bit about that because, as we've had in past discussions with Ingo, is money mobility is an evolution and a development that all sorts of stakeholders can benefit from. But when we think about money mobility in this particular ecosystem, you mentioned a moment ago that some of the innovation could see a bit of a headwind. What would be the most prevalent ease of use and maybe confidence building moments of money mobility that might actually show that these partnerships can work and are working?
Yeah, I think, the way that we think about it is, forming alliances with more well-established financial institutions. I know there are a ton of new entrants in the space. Back when all of this kind of started, I'll call it the early days of banking as a service, there were probably, 5 to 8 sponsor banks that did money movement and card issuance. I think now we're at 30 plus, and 76% of banks are now saying some form of fintech partnership is where they see their future growth. And so I think the key is going to be picking programs that are more well established and have these checks and balances in place. But the way that we're looking at sponsorship and money mobility, people at the end of the day want to receive their money the way that they pay others. Everything's just turning instant, whether that's inbound or outbound facilitation of payments. And card issuance is just going to be a natural part of that. And so I think you're going to continue to see that evolve. And those two, the processors that were really only on the money movement side, that are now, separated from issuing, I think you're going to kind of see a convergence of those two business models.
When we think a little bit about fintechs in general, and then if you want to comment on on neobanks too, is there an image problem that's developing here? It's not necessarily borne out by the fact, look, if we look at where consumers are putting their money, they are gravitating towards a lot of these companies. But is there a bit of a PR problem that some of the digital-only companies are facing? And how do they start to remedy that? How do you differentiate yourself as a fintech that is seeking to innovate, to reassure the public at large, but also the regulators that you are indeed putting safeguards in place that may not have been there before?
Yeah, it's a good question. On the consumer facing side, unfortunately, most consumers aren't reading terms and conditions, and there would literally be no way possible for them to understand, account structure, right? Some of the fallout of the Evolve and Synapsify issue that we're seeing right now is the way that those FBO accounts were, the omnibus accounts were structured. And, whether they were done right or done wrong, there's no way for that end consumer to know, is this really an FDIC insured account? Because I don't have an understanding, or nor should I, right, of how the accounts are being structured on the back end. And so I honestly think it's going to come more and just consumer education and really pushing the safety and soundness of the financial institution on the other side. And that goes back to kind of where we were talking about earlier with these financial institutions being able to show their regulators and just putting that like muscle in place to where they're making sure, these programs are, marketing themselves appropriately and giving proper claims into what type of services they're offering the consumer. But unfortunately, I don't think it'll be very easy for consumers to understand what the difference in a bank and banking services really are.
Yeah, how do you start to bridge that divide between, let's say, what goes on between the companies themselves, it can be opaque,
Yeah.
uh, and um, and then extending that um, knowledge to the consumer in a way that they can understand and feel comfortable with, because all of that begs this question: where are we headed with banking as a service? Is it only a piece of a much larger puzzle? Is it going to be, you had mentioned earlier, direct relationships may be the natural evolution. So
Yeah.
what did banking as a service look like, and what is going to happen to get consumers to be a little bit more educated on that?
It's a great question. Yeah, I do think as most move towards more direct models, and you maybe start seeing more, banks offering these same, call it platforms that, that are Chime-like, where there's more innovation, there's early wage access, there's more innovative money movement availability coming from an actual bank. I think you'll start to see a lot more of those brands emerge, if you will, digital first brands that are owned by the FI. And then I think on more of the fintech brand side, where, the fintech is still, the face, I'll call it, of that bank services offering. I think it's a lot of the comfort's probably going to come as regulators get more comfortable with the space and start putting out, more consumer friendly notices about, the offerings of these services, now that, they all have their arms wrapped around how it should work. Examples of real life examples of banks and fintechs who are doing this the right way. There's a lot of clickbait and everybody who's doing it wrong, but there are a lot of great programs who've been doing it right since the beginning. And I think we could use some more PR around those.
Is there a role for technology? I mean, everybody talks about AI. Your comments here are welcome, but what is the role of technology in this particular avenue? I mean, is there a different set of data points that are going to need to be harnessed? Is there a different level of consumer? We've been talking about awareness. That means consumer permissioning of data. So are there different ways, and even from your vantage point with money mobility, that data starts to move this differently, and that there might be a role for, even in fraud fighting, AI and other technologies?
Yeah, I'm definitely sure there is. Obviously, AI is kind of like the new hot topic within our space. I think there's a lot of utility in AI that we probably even haven't discovered yet around transaction monitoring and underwriting, and are they being able to go out and scour these sites and make sure that proper marketing language is being used by these fintechs, right? But I do think that we're early still there, but there's a ton of use there.
So as we start to look where we are and where we're going to, I want to give you the floor a little bit. What have I missed that we haven't addressed yet? And maybe what you'd like to add onto that we have discussed.
No, I think this is great. I think it was interesting. I've been at a few conferences lately, and now the new hot topic is, our fintechs going to be regulated entities? Is that where we're going? And I think it's going to be interesting to see how that plays out. I think we do need to keep in mind, the onerous for these, efficient BSA/AML policies, monitoring disclosures, and that third and fourth party risk management. I think all of that still needs to sit with a financial institution. And so I just think as the tea leaves fall, I think we're going to have a better framework for operating. And I don't necessarily think, all the chatter about fintechs being regulated is necessarily needed. I just think we need a better, a better sound system for these banks to, have a playbook, if you will.
That's a great way to look ahead. A playbook would benefit pretty much everybody, and playbooks always change, so we'll see
Yeah.
where we go. Lydia, thank you very much for the time.
Thank you so much.